Let me also welcome on board Sandip Sabharwal and find out what he's making of the market right now. Sandeep, hi, afternoon. While nothing is really happening in the market for the last 2 days, how do you think the year ahead is going to look like?
I think the year ahead will be very good. I believe 2024 will be a year of good double-digit gains in the markets. 2023 was expected to be a bit dicey in a way because of the rate hike cycle and the impact that will have on valuations, etc., market sell-offs, and whether it can create some disruptions. I believe that a lot of people are now worried about higher interest rates. In my view, the time to be worried about higher interest rates is not now, it was earlier. Now we need to look forward and see what will happen as interest rates are already high and then eventually they'll start coming down, and what that does to market valuation and overall economic outlook, and both of them which are positive.
Point taken. But Sandeep, where would you put your money to work? Will it be large cap names, the likes of Reliance? I know HDFC Bank you're not too positive on, but the other banking names? Or would it be select mid cap and small cap names which are seeing better value right now?
So any strategy has to have a combination of all kind of stocks. So on the large caps, on the banking side, ICICI Bank, Axis Bank look good to me. On the auto side, I think Maruti, M&M, Bajaj Auto all look good. On uh, construction or capital goods, L&T looks good. I think there are a lot of companies related to economic growth on the large cap side which should do well.
Sandeep, do you think that via all this infra and construction boom which is currently happening along with the larger manufacturing theme, perhaps the best way to play that could be via banks?
Oh, banks is one way, but banks is not directly correlated so much to the capex cycle. I think you want to play capex cycle, you have to buy construction equipment companies, possibly the capital good companies, maybe cement companies at some point of time. So I think those will be better proxies, or the construction companies themselves. Those are better proxies to the investment cycle.
For NCC and any cement name that you would like to recommend?
I think cement was slightly becoming a concern as the crude prices were moving up and the impact of higher input prices could have become an issue. But then we've seen crude come back to pre-start of Israel-Gaza conflict levels. So I think cement is a decent sector, and the largest player out there is the best one to play the cement cycle. So I think Ultratech is the best way to play that.
But since you were talking about the construction theme, what about the building material in the sense of consumer durables, cables and wires, even ceramic players? Anything that comes to mind within that pack that you would want to talk about, even paint companies?
So paints, I'm not a buyer because of the impending entry of Grasim and the impact that will have on the margins of the incumbents. But on the rest of the building material space, so I think there are companies which could look interesting, but at the right valuation, many of these wire companies have gone up a lot. Although on the durable side, yes, durable side because stocks like Havels, Voltas, etc. are depressed. So they will eventually come back and do decently for investors.
What about Reliance? That continues to drag its feet today as well, just around the 2300 mark. Do you expect this consolidation and sideways move to continue at least for the, let's say, next 2 to 3 weeks?
Yeah, it seems like it should continue for some more. I would probably believe maybe in a couple of months, a couple of expiries going forward. I don't expect any major kind of a breakout coming back into these 3-4 odd larger cap names, Reliance Industries. If I can probably club the likes of HDFC Bank, Kotak Bank, etc. into the same category, because these stocks have been absolutely sideways. No evidence of a major short covering which has happened into these stocks in this last 3-4 days of the stocks being into a range. I think that's also one of the major reasons why I would probably expect that these stocks could remain a lot more sideways.
Sandeep, your view on Mamaearth or Honasa, the stock got listed not with a big gusto, it was just around that 340 level, and now it's much below the issue price already, almost $300. Would you look at this one?
Yeah, I look at it, but I won't buy it.
But that's what I meant in terms of buying it. Would you be buying it at any level, any fair value that you have put for this one?
I don't think it has any fair value. I think it operates in a space where it has no, uh, let's say, unique capabilities. It's a brand built up by spending huge on advertisement and promotion, which are, I think, 35% of their total expenditure. It's an unsustainable business model. So let's see how it goes. Hopefully, it does well for the shareholders.
Yeah, I mean, one would think, Sandeep, that cases like these would be more takeover targets eventually.
No, but then whoever takes over, what will they do with a company where the entire sales focus has been to spend 35 to 37% on promotion advertisement, and the average promotion plus advertisement expenditure of the medium to large FMCG companies are between 8 to 12%. So how do you make this a profitable venture? Because as soon as you cut down those spending, the sales will just die away.
The big movers of last few weeks are actually seeing some profit booking today. Naresh, case in point being BSC, that's down about 5%. Kalyan Jewellers has come off the highest point of the trading session and the record high levels at that, down about 4%. And then some of these manufacturing names, Endurance, Amber, etc. Do you think there's a bit of a reversal here?
So a lot of these names, say BSC for example, has gone up from 500 back in March to 2000 plus levels. So that's been a 4x move. So even a 15-20% downtick from the highs would be normal. It's just a 5% downtick as of now. So going back to 1700, 1800 would be a normal case. So I would expect some more correction and then maybe a pause. The trend is strong, but a correction of 15-20% is normal after such a move. Same is the case with other names which have done really well over the last 3-6 months. So we are seeing some bit of topping in overrun names.
Okay, that's the take coming in on some of these high-flying stocks. In the meantime, it continues to be an M&M day, really. In fact, not just M&M, it continues to also be Hero MotoCorp, Tata Motors, Maruti as well is scaling higher. In fact, Sandeep, in the year gone by, and I'm only talking somewhat to somewhat, you know, you've seen a re-emergence or renewed vigor in the likes of a Bajaj Auto, Maruti for that matter as well, in terms of the kind of MCAP it's garnered. Quite a few of these names have, you know, sort of joined into the auto rally. But what do you buy afresh or what do you add fresh positions to within autos?
I think we need to see how the sales pan out in the festival season, etc., and near-term impact, because there are a lot of news flows about high inventory levels, although the companies sound bullish. So that's something we need to see. But overall, directionally, I think the outlook is good because interest rates have stabilized and input prices have stabilized to moderated. So we'll see continuous possible improvement in margins and profitability for many of these companies. So I would be positive on like Tata Motors. We own Mahindra Mahindra, and we own Maruti also. Bajaj Auto, I would have liked to own, but we could never buy, and then it never corrected. So, but I think that will also do well.
Okay, point taken. So those were that was a recommendation from the auto pack. Let's take a look at some of the other buzzers as well. Aegis Logistics is higher by 7%. You also have JP Power, which continues to be very volatile for itself. BSF India, which is a result candidate. You also have Triveni Turbine, etc., and Welspun Corp doing okay as well. And on the losing side, it's MTAR Technologies, KRBL, and Mishra Dhatu Nigam, which are down. Let's take the closing trades from our chartists as well. Naresh, what's the closing trade?
So that's a buy on City Union Bank. The stock has finally shown some bit of resilience and relative outperformance after a really long time. Finally, the stock has crossed above that 140, 145 mark. So looking at it as a stock which could surprise on the upside in the short term.
What about you, Kunal?
So I'll go with real estate stocks. DLF is a strong candidate of a breakout, trading about 600 levels. I think till the time the stock is trading at the 600 plus mark, looks attractive for a short-term setup of at least a 5% upside.
Right. Sandeep, where within realty are you still comfortable after the run-up that's already taken place in the past 1 year?
Yeah, run-up has been very strong, so it's tough to find value now, actually, if you ask me frankly. So for people who are holding, I think there's no reason to sell also. But for new entry, new buying, we need better prices because these stocks are just shot up too much.
Yes, they have across the board pretty much. But Sandeep, always good chatting with you. Thanks for taking the time out, and we'll see you on Sunday on Diwali Day.